So we are going to solve, this is a teacher Haris, but you are seeing my YouTube channel. We are going to solve a question from February, March 25, 22. February, March 25, 22. And the question is basically question number 2. That is from final account of sole trader. The topic is final account of sole trader. I have sent you on the WhatsApp group. It's not been given as a printed one. If you want to take it, then we can ask these people. They can print. Okay, Viraj is a trade retailer. He buys on credit and sells for cash. He rents out an area of the shop to another business for 172 per month. 172 per month. He rents out his premises actually, shop. So that is the income. That is a service business. Because we are engaged in the business of renting our shop. Trial balance is given. Revenue is given. Rental income 2580. Sales return, which is subtracted from revenue. Inventory opening, purchases, rate, rent and insurance. General expenses, wages, bank charges. Fixture and fitting is a non-current asset. Trade payable, bank overdraft, capital and drawings. Inventory at 31st was valued at 5,900. That is the closing inventory in the question, given in the question. So I think it's not a service business, it's a trading business. He rents out an area of the shop to another business. So rental income is a side income other than his business, which is working as a retailer. So depreciation on fixture and fitting is to be charged at 15% using straight line method. Rental income include the amount due from the period 1st February to 30th April. 1st February to 30th April. So how many months are going to be? This is 14 months. So we have been given the income of 14 months where we need to record the rental income of 12 months. If you count it down, February, March, April, May, June, July, August, September, October, November, December, January, February, March, April. So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 11, 12, 13, 4. 15 months. So 15 months income is there from 1st February. Our financial year ends on 31st January. So what we are going to do, rental income 2580 divided by rental income is 2580. This is for 15 months, right? Into 3/15. What will come? Divided by 15 into 3. That is going to be the unearned income or income received in advance. We need a calculator also. We need a calculator. So what is the amount? Tell me the amount actually. Because I have to subtract that amount from 2580. Because this 2580 of rental income is for 15 months, which will end on 30th April. So March, February, March and April, 3 months is going to be the prepaid income, or it is the income received in advance. Income received in advance, or you can say unearned income, income received but not earned. No, because our year end is 31st January 2025. So let's see. This is 1st February to 30th April 2025. It means our financial year ends at 31st January. So the remaining February, March and April, 3 months is going to be the prepaid income or unearned income. What is the amount? Amount 516. So 2580 minus 516, 2064. This is going to be the income which we are going to record in the income statement or statement of profit and loss. At 30th January, Viraj owed 282 for wages. This will be added, and 55 for advertising. This will also be added, owing, accrued, outstanding. After the trial balance were prepared, Viraj received a bank statement which shows that bank charges of 13 have been paid in January 2025. Right? After the trial balance was prepared, Viraj received a bank statement. It means that these bank charges have not yet been deducted from the expenses. It is not recorded under the heading of expenses. So we have to add these bank charges in 13 in our bank charges because it is not recorded. It has been paid. But bank statement shows Viraj received a bank statement which showed that bank charges of 13 had been paid in January 2025. So January 2025 is a part of our financial year, which have not been recorded. So 143 will increase the bank charges by how much? 13. By 13. Okay. Now let's prepare the statement of profit and loss or the income statement. And do here. Oh, sorry. Statement of profit and loss, and we'll start with the revenue, and revenue we say less sales return. So let's see that what is the amount of revenue. Revenue given is 89,600 and sales return is 2195. So 89,600 and 2195 subtract कर दें, क्या आता है? 89,600 minus 2195, 87405. Okay. Now I will subtract less cost of sales. Cost of sales include opening inventory, add purchases, less closing inventory if given, add less purchases return, add carriage inward. I think all these things have not been given in the question. So let's talk about opening inventory. Opening inventory given is 4,500 and purchases 53,700. Just a minute. 4,500 I will write here, and 53,700, and then I will subtract the closing inventory which is given in the additional information, 5,900. Okay, so let's do this. So what is the answer? 4,500 plus 53,700. See, 4,500 plus 53,700 minus 5,900 will get the gross profit. What is the answer? We will add rental income in this. What is the answer of cost of sales? 52,300. Then 87,405 minus 52,300. What is the gross profit? 35,105. Add rental income, that is the other income, and that is 2,064. Why, sir? Because the income is 2,580, but there was prepaid rental income which is received in advance. So it will be subtracted. 2,580 minus 516, 2,064 is our income. So now 35,105 plus 2,064, 37,169. Now less expenses. In expenses, I will go with all the expenses. And first of all, I just want to write the bank charges. And bank charges are given. 33 bank charges have not, bank statement mein show ho rahe hain, but it is said that it is not yet recorded in the bank charges as expense. So that is going to be 143. 143 plus 13. How much it is going to be? 156. Right? Then we have other expenses like rent and insurance, general expenses, wages, stationery and advertising. Rent and insurance, wages, stationery and advertising. Then there is wages. Okay, let's see. Rent and insurance is given 8,760. Is there any adjustment regarding this? No. So I will write 8,760 over here. 8,760. Then wages, we will write wages as an expense that is given 7,350. Is there any wages accrued? Yes, 282. So 7,350 plus 282. What is the amount? 7,350 plus 282. Yeah. Amount is 7632. Okay. Same is the case with advertising. There is an advertising outstanding accrued owing 55. The stationery advertising is 710 plus 55. That is 765. 710 plus 55, 765. How come, sir? Let me show you. This is stationery advertising 710 plus there are accrued stationery 55. So I've added into this. I've added it into this. Second is general expenses 2945. I missed it. There is no change in general expenses. I will write simple 2645. Then there is a depreciation, which is also an expense. Here 2945, sorry. 2945. Okay. Then there is going to be depreciation on fixture and fitting. I'll write it here. Depreciation on fixture and fitting. So what is the depreciation? If you see the charge for the depreciation is going to be 15% using straight line. The cost of fixture and fitting is 12,500 and 15% of that, what it is going to be? 12,500 into 15%, 1875. 1875. So what is the total amount of expenses? $22,133 और इसको we will subtract from gross profit, whatever the profit we have. So we'll get the profit for the year. Gross profit minus all expenses, we'll have the profit for the year. 15306. Okay, very good. 15036. Okay, so we are done with that. I hope so you got the answer. Now let's move forward. It's quite simple. Only the income received and advance point was little technical. So is there any other expense which we have missed? Let's have an idea about this. No one. Okay, that's fine. Income statement we have prepared, or statement of profit and loss. Prepare the current liability section of the statement of financial position. So we are supposed to prepare the current liability section. So let's prepare that. Current liabilities. In current liabilities, we used to write trade payable. Then we are going to have advertising owing. Then we are going to have wages owing. Then we are going to have bank overdraft, right? So let's see. First of all, trade payables is given, that is 3125. Okay, so trade payables are 3125. It's a current liability. Then advertising owing is going to be 55. Wages owing, there is 282. Bank overdraft, let's see what is the amount of bank overdraft. Bank overdraft is 1260, but we will add 13 into this, because bank charges we have paid, which is not recorded. So 1260 plus 13, I will write the amount of the bank overdraft. Because we have added 13 in bank charges, we have to pay the bank charges through the bank. As we have a bank overdraft, so bank overdraft will automatically increase. So that is 1260 plus 13, how much? Then 1273. So, right, what is the total of the current liabilities now? 3125 plus 55 plus 282 and plus 1273. There is no other current liability left in the question. 4735. Okay. 4735. Okay. Okay. We are done with that. Next, let's see. Next part. 25, 22. Current liability section we have prepared. State the accounting principle which Viraj has followed when he did not include a figure in his statement of financial position for his inventory of price labels. Right? That is prudence concept. How come, sir? It is difficult, yeah. It states, prudence concept says that inventory is valued at cost or NRV, whichever is left. whichever is less. So inventory should not be recorded at price labels. Price labels का मतलब है sale price. Inventory at price labels का मतलब है inventory हमने selling price पे लिख ली. गलत है ना? It should be written at cost or selling price, whichever is less. So inventory at price label should not be shown as a figure in the balance sheet or statement of financial position according to accrual, according to prudence concept. So prudence concept. His skills as a salesman will not be recorded in the statement of financial position because it is against money measurement concept. Money measurement concept says that only those things are recorded in the books which can be expressed in monetary terms. Viraj wants to refurbish the shop. He thinks that new fixture and fitting would cost between 10 to 15,000. There are several local shops selling the same type of goods that Viraj sells. Advise Viraj whether or not he should refurbish the shop. Justify your answer by providing two advantage and two disadvantage of Viraj refurbishing the shop. So non-current asset will be an extra expenditure for him and it will increase its bank overdraft more, right? There will be cash outflow, so it will increase his bank overdraft, but he will be able to have a new non-current asset which is going to be used for more than 1 year. But that non-current asset is subject to depreciation. That will also lead to increase in expenses and it will reduce our profit also, right? But the problem is that there are several local shops selling the same type of goods, so we want to have a better look for the customer, so it might increase our sales. We could have more customers to purchase our goods because our goods are the same, but the environment we are giving and the area, reception area will be much better because of the fixture and fitting. So we will be able to attract more customers and customer might be retained and we have a good relationship, can have a good relationship with the customer because we are giving him a proper place to sit and have a meeting with the particular reason. What is this shop is basically all about? Viraj shop is a retailer. Okay, he's a retailer, right? That's it. So this is how we will done with that. And I will go with the shop because we should have a unique selling point. So if we are going to buy a fixture and fitting, it will give us an edge over others. And our non-current asset will also increase. And it is possible that we can have more customer. But problem is this, that we have a bank overdraft already. So 10 to 15,000 is a big amount, right? So it can create cash flow problem for the business. So I will not go with the refurbishing of the shop. Not because of the reason that it will help us out, because it will increase depreciation also and cash outflow. Our cash flow is not, liquidity position is not good, that we could have go for such kind of a expansion of a non-current asset, because fixture and fitting is not going to expand our business. It will just give a better look to our premises. And obviously, it might increase customers, but we are not in a position to spend that amount because we already have a bank overdraft, right? So this is how we are done with this question. Thank you very much. Errors we have already done, which I will upload. And the last question is, the ratios is quite easy. The last question is from non-profit organization, which we have already done. Thank you.